Hello everyone, this is Okane and we're going to continue our lessons for beginners. We talked about the stochastic oscillator, this is the indicator down here, and we have also covered the trends, how the stochastic helps you find the trends and identify overbought and oversold positions. So let's just quickly look back at what we discussed in the last video. So if you look at the stochastic here with the standard settings 533, we talked about the level 80 here as the overbought position and the level 20 as the oversold position. So the overbought position tells you that the prices have been overbought and the sellers might enter the market. Might enter the market, not will, for sure. And the oversold at the 20 level down here, when the lines touch or go below the 20 level, it tells you that prices are oversold and the candles might go up because the buyers might enter the trade and start pushing the price up. So in order to have success with the stochastic, with telling whether price is overbought and the prices will turn or not, you need to go with the trend, with the major trend. So in order to help with our trends, we spoke about finding areas with this is what we call price action, when you try to study the candles and understand resistance and support. Resistance is when price tries to go up but meets resistance. You know, just like when you take your bicycle out for a ride and you get some wind and it tries to push you back. It's a strong wind. It gives you resistance, so it slows you down, right? And if the wind is too hard, you probably have to walk your bike back home. But this is it's the same principle with price action. When price is going up, it hits resistance. If it's too strong and the sellers enter the market, boom, they push it back down again. And you might keep trying, but eventually you fail. And so the price hits resistance, goes down, or stays there, tries to fight, like in this area, tries to fight, eventually it loses, then comes back again. So support is the opposite. When price comes down, tries to break down, but then now this time you have the wind in your back pushing you all the way to your destination. Easy ride, no problem. So you get support, up you go. So that's support and resistance for you. And the trend, sometimes you have a clear trend, sometimes you have a ranging area, like on this chart you see how prices have been ranging. If you just put another line, just a random line down here, you see we had some success here with the uptrend, but then it failed, kept ranging here. Then it tried to make it through and continue with the downtrend, but then that failed as well. Again, we are back in the range here, and so far we're still there in this area. So not a clear trend if you would look at the 4-hour time frame, but this doesn't mean you don't have minor trends on the lower time frame. So for example, if you would draw a trend line like this, you would see that, hey, price is actually trending up. So in this area you could have made several calls, but in this area you could have made several puts because you have a downtrend here, and at the same time you have an uptrend here. So there is always the case with the trend within the trend, and most traders don't realize this, and they either counter trend trade, which is wrong, and either they don't take advantage of these minor trends within the major trends. So if you understand this, you will never counter trend trade, because you will always find a trend within these trends. So if you go down to the hourly time frame, let's see what we find this time. So this time we find a nice uptrend here. Let's move our line. Let's put a new line here. So this time we had an uptrend here, but as you can see, if you zoom out a bit, you will see the highs are getting lower, right? You get lower highs. So another line here. So downtrend was broken here, uptrend, but we are still in a downtrend, still no clear uptrend here. So you have to understand the trend within the trends. I know it's difficult for beginners. So we're going to do something easy. We're going to start with inserting a new indicator you're going to learn, because those analyzes are difficult for advanced traders. I just wanted to mention them so you understand, because some people ask me, hey, why did you, for example, take a put option here? I will come back to this later, but let's look at this arrow. I had a put option there, and let me show the picture, show you the results so you see that I actually did take a trade there. And I hope you can see the picture. As you can see, this was a good win. So I know on the charts it might look like it was a close call, but it wasn't. As you can see, you can count the pips. So it's about 5 pips. It's pretty good for this put option. And it worked out. We'll get back to this. Now, as I was saying, you will understand how you can take advantage of this, of whichever way the price is taken, whichever trend the price is in, you can take advantage of it and take trades, if you do analyze this correctly. So let's insert an indicator called a moving average. You'll find it under insert. This is MetaTrader, by the way, if you don't know what this is, and always make sure you download it from the official website, metatrader.com. This is MetaTrader 4. So trend and moving average. We'll start with an exponential. So choose the method exponential, set it to 200. The 200 basically refers to 200 candles, so the period is 200 candles. And click OK. So now, as you can see, this confirms what I mentioned before about about us not being in a clear trend this past week. As you can see, the price has been sometimes above, sometimes below. So not a clear trend. You don't see, as we spoke in the previous videos, what you want is clear lower highs and clear higher lows. Higher lows for uptrend and lower highs for a downtrend. We don't have those things. So the EMA, this is good for beginners to understand trends. Now let's go to the daily charts, just to see what I mean here. As you can see on the daily charts, it's very clear what the trend is. The trend is going down, right? Look at the EMA. This is the period. It's counting all the periods back for 200 candles on this daily chart right now. And as you can see, the prices are below the EMA, below the EMA 200, which means we have a downtrend, a strong downtrend, because look at the distance. It's far from the EMA, as here it was pretty close, and then it tried to make an uptrend but then failed. So when it's far away, you know, the trend is stronger. And you can also see the lower highs. You see here it went lower, and we have another low here. And how do you know that there is a lower high? Because you look at the overbought positions. The stochastic helps you with that. So you look at this, you see that, okay, we had an overbought position here when the stochastic was even well above the 80. And then we had a lower one, and it's slightly the same area as the one before, but then price dropped, so we had the next low overbought in this area, and then in this area shows lower again, then slightly lower, but then the price has been consolidating, but it's still in a major downtrend. So now you go to the 4 hour, but then here you see, okay, I don't see a clear trend here. So if you were going long term, obviously you could trade these tops and take weekly put options, right? So you would draw your resistance line, and when price came up, you could take a put option depending on your expiry. But if you're doing shorter time frames, shorter expiries, obviously you could have traded these rides up on the hourly or 5-minute time frame. So it depends on your analysis how you use these trends. So the EMA, how is this going to help you? So you would scroll down and you need to understand how to read the trends by using the moving average. So if you go to the hourly time frame, you would see price was coming up, it broke above the EMA, came down, it got totally oversold, right? Which, if you remember, if you get a higher low and it's oversold, so it's time for a call option. So you could have made a 4-hour call when the price touched the EMA and closed above it. You could have entered maybe at the end of this candle here, or already at this candle for 1, 2, 3, 4, maybe end of day. So it's based on your strategy. Now, as for me, I only do short time frame, 10-15 minutes, as the trade I showed you before. This one, for example, this was a put option. The major trend is still down going, so I take mostly put options, even though I'm trading short time. So let's get back to this trade I took. Let's go on the daily charts, and as you can see, we have resistance here. Remember, resistance is when price comes up and it meets resistance because there are sellers pushing the price down. So it met resistance in this area. You can count all the candles. Let's zoom in a bit. You can count all the candles that either closed or came up with the candle wicks and touched. As you can see, it's a mix. Some areas you have the candle wicks, some areas you have the candles closing below the line. What we want is a lot of history. Okay, because some people ask me, do you draw your line at the wicks or at the close? And if you look at the charts, you always almost have what? A mix of those. And you want to go where you have most history. So if you look at this place, so this is where I took the trade, so let's ignore that. Go back. Here you have candle wick, and here again candle wick. These candles closed, candle wick. Again the candle wick, candle closed, 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 closed. You got support here, right? And here 2 candles. This candle closed, this candle opened below. And you can keep going back. See what more we have. We have this was a brief support area, but then it broke. And we have some support here. We met some resistance here. This candle closed below. Here you have support. You have support here again. You see the gap here. So this was probably before the weekend when price closed here, and then on Monday when the prices opened, it opened all the way up here. Then price was pushed down, but then eventually closed up here. So again, support. You have lots of support here. This was some support resistance area. again, you have support. It depends on how far back you go, but this is enough. We already have plenty of confirmation here, so you don't even need to go that further back. So now we know our line is good, right? And even though it's on a daily, as you saw in the picture I showed you, in this picture, you saw that I could take this was actually a 13-minute put option. 1627 expired at 1640. Selection low, so a put option. And only 13 minutes based on a line that was on a daily chart. It was confirmed, drawn on a daily chart, but then we go back. So let's look at the 4-hour time frame, see if we get confirmation here. Again, you see you had candle wick, candle wick, candle close, candle wick. Here, this is good. Look at this area. A huge resistance. See how price was consolidating, ranging, jumping up and down until it eventually fell. So very good confirmation. Support here, candles closing above the line. Resistance here, and again, so support, resistance. So very good position. And the hourly time frame. Again, you see the candle touches, the candle wicks. See how perfect it matches the line we drew. So let's go to the 5-minute time frame so I can show you how the trade ended up. Let's put a line so we can find it. And remember, one thing that's very important. We had an overbought position, and this is something you should note. Look at the stochastic before we move down. This is the 4-hour time frame. Look at the stochastic. See how it's getting overbought at a lower position. Okay, let's draw a line just so it's more clear to you beginners. There you go. So put this line there and then put another line here. You see this top higher than the other one, and this stochastic was higher up. Then we had this other top stochastic slightly lower, still overbought. We had this position here, but then the next two ones also lower than the previous ones. So we see the price has a tendency to get overbought at a lower position, which confirms our analysis from the daily chart that the major trend is a bearish trend, downgoing trend, because prices are below the EMA 200, making lower lows, as you can see. So it confirms what we learned from the daily charts, right? So next, the hourly charts. Again, as you can see, overbought, well overbought. So good. Now let's go to the 30-minute time frame. Do we have overbought? Again, we have overbought position right at the line. Let's remove the other line here. So the 15-minute time frame, what do we have? Again, overbought. This was the trade, so let's move our line on the right candle. Yes, overbought. So as you can see, this was a really good secure trade because we have so many positions, so many time frames overbought. Remember, we went from the daily all the way down. The 4-hour was overbought, the hourly was overbought, and the daily doesn't need to be, because we're doing short-term trading. So the next 5-minute also overbought. Now let's find the trade on the 1-minute chart. There. So I didn't enter on this first candle. I could have. but I waited. So I entered exactly at this candle when it touched the 420. I actually went slightly above, just slightly above, not even a pip above, and it expired here on this cross, on this bearish candle down here. Remember, the white candles are the down going ones, the green ones are going up, and even the 1 minute chart was overbought. So as you can see, we didn't care about what happened next. Sure, the price continued up, nothing we could have predicted, but what we could predict was this. We knew that when price touches this level, due to the history, due to the major trend being bearish, meaning downgoing, we knew that we had lots of sellers in this area that would like to sell. And that would give us a window of opportunity to enter a put option. This is what we did. And I will get back to why I chose look at the time here, 40 expiry, not 45 or anything else. I will get back to it soon. And as you can see, it closed here, and right after the price kept going up. This is why my analyzers work best with the lower expiries, because I don't know what's going to happen next. I don't know for how long people are going to push the price down or up, and that's why I only like to take short expiries. It works for me. It doesn't work for everyone. So why did I take the 40 and not 45? Because if you look back, EURUSD, these are some things that you have to learn. It doesn't always work, but EURUSD have these patterns. For example, look what happened after the 40. This is the 40, even though it says 39. So when the 39 candle closes, the clock is 40, right? It's the 40 minute. I remember that. So what happens is that, look, it went against me, and the 45 candle closed here. Now it might have as well have closed up here. So that's why I'm scared of those round numbers like 45 or the full hour or 30. As you can see, this was the 27 minute. I entered the 30 closed here. It doesn't matter in this example. So the 45 closed here. I didn't want to get caught in a loss, so I wanted out at the 40 candle. So this 5 minute candle closed down here. The other one went up there. This is the see it on the 5 minute chart. There it is. So our trade expired here on this candle and not on this candle. So I didn't want it to go against me. Only 10-30 minutes, and that was it. So when did I enter, and why did I enter? I entered as soon as the price touched my line. That was it. That's the criteria for entering the trade. It touched the line. I don't wait for it to close, because if I waited, I would have probably entered here and I could have lost the trade. So doing short expiries, you need lots of leverage. And how do you get leverage? You must enter at exact positions. And that's why I trade this way. I trade when the price touches my lines, and that's why I'm so careful to place my lines at the best place I can find. So you have to do your analysis carefully, look at all the time frames. Is your line at the right spot or not? And the higher time frames are better because they tell you with lots of more volume, lots of more history. They confirm your trades with more history and volume. So look at them, and look, price is going down. The market recently opened. It's Monday. Price recently opened. Still the volatility is low, but it's going down, so probably going for the next support area. And if you ask me, I would look back again, see. I would also look at higher time frames as well, even the monthly charts. So let's remove our candle here. Let's take a look at that. So let's go to the monthly chart. So where is price going? It's hard to say because we don't have much history. We have this place, but this is too far away. So on the weekly charts, what do we have? We have this area. So let's go to the daily charts. Okay, so this seems to be, this was the previous support, but remember the major trend is going down. So this time the price might actually break this line. So I wouldn't like to take a call here. And if I would do, I would only do a short call, because short call option, because the buyers might enter the trade, push the price up for I don't know, 10-15 minutes, and then the price might continue down. So I don't want to get caught against the trend. So if I would do a call option, I would do a short one. And you can see here, so we have an area of support in this area. And here as well, we have some support resistance action. And so it's kind of difficult to say. We have also this area, which I think is the area where possibly, because it's the closest for now. Look at the support, the price action here, support, not all the way down, but almost very close. And again, you have support here. You have further support here, really good. You had some resistance there, so you can go back and check previous history. But I would say probably the next stop here, but then it might break and the trend might continue down. Again, remember the major trend is going down, so you don't want to go against it. And this level has been tried several times. So if you do want to take a trade there, you should do a short expiry, because as I said, price might this time, it might actually break this level. So that's pretty much it. Remember the EMA. Go to the, if you want to try this out, try this on a demo. You need to learn. Go to the 15-minute time frame, for example, and wait for price to, for example, in this area, as you see, price was climbing. So what you want to do is to find these areas of support, which are the EMA, is the EMA itself. So price comes down, touches the EMA, for example, in this area here, and you see that prices are oversold. Let's put a line here. So practice on this, and you see, okay, price is oversold, candle touched the EMA, and the candle closed above the EMA. So you would enter a trade for 15 minutes or half an hour, preferably. Do this on a demo, try it out. Also look at other time frames, as I said, because you might find those strong support resistance lines. For example, if you want to enter a trade during this day, what you would have done is to put a line here, right? Because this was the previous resistance. You see here, 1, 2, 3, a lot of candles here, and they were overbought, right? Look at the stochastic. So those were resistance areas. But in this case, when price came down here again, it's oversold. See the difference? You have a higher low. it's oversold, but here it was overbought. So now this place that was resistance, it became a support. So here you could have taken, now this is the 30-minute time frame. So in this case, you would want to take a longer expiry. Just trying this out. So simple strategy, just look for higher lows. And if you want, you can try, if you're good at drawing lines, then you can do the short expiries like I do, and just enter whenever your line is touched and confirm with the stochastic. Are they oversold? Are they overbought? And just practice, see how you do, and let me know in the forums. You'll find me at binaryoptions.net. Just go to the strategies thread and ask me anything you want. All right. Thanks for listening. See you later.